Alright guys, so this is the video. I promised I was gonna do a follow-up to the last forecast I did, and so I'm just trying to get this done quickly. This was the forecast, and it was a beautiful trade. It played out nicely, although it took like a couple of days. I think 2 days. So in this video, we we're gonna do a quick recap why I took the trade and why I set all these targets for the price. And now that we've reached the target here, what we all want to know and what I also want to know is where do we go from here? Um, Going just by the forecast alone, I was anticipating a buy from here, going back into the range. But we're gonna go into that now and see what I think we should be looking forward to this week. And so, like I said, this is the same chart. I brought it over. So, as I said, we're going to do a quick recap just to let you guys know why I took the trade in the first place. Because I think if you understand that, then you see, you understand like where we're going with this. So let me hide all of this. Okay, I think all right, so to start we're gonna go to a higher time frame. So what I typically do is go to the higher time frame and mark out the low volume areas on the chart. So this is starting from the weekly chart. We can see, let me hide this to make it a little bit visible. So we've been on an uptrend, as you can see. It's like gold has been going up forever, for weeks. This is a weekly chart, so you can see how strong this move up is. And this is the ExoCloud. It's my trend indicator. I just use it. It's a pretty simple indicator I built just to help me have a visual on like what the trend direction is and help with entries and stuff like that. So we're obviously in an uptrend on the weekly chart, but as soon as we got here, you can see we're starting to consolidate sideways. We're no longer on a full-on bullish rally like we did before. And whenever you start to see a sideways movement when price is moving like this, it also means it's a period of accumulation where a lot of volumes are being done, because you have to think this is a weekly chart and there's a lot of money going into the market to push it up this far. And at some point, market makers have to like rebalance, like, and take profit and all of that. There's a whole lot of stuff that needs to happen after a big move up like this, and all of that stuff starts to happen in here. And how do we know this for sure? Because we're not guessing here. This is the volume. This is the visible range volume profile. You can see the volume is literally showing us this range right here has a huge amount of volume, and out of this whole volume right here, this is the exact peak of the volume. So at this exact price point, 3341, that's the specific price where the most transaction was done. Before we came all the way up here, you can see there was pretty much a very thin profile, not too much going on. Last time we had this much activity was all the way down here, and you can see what happened up here before the trend. There was accumulation too. It was a sideways movement, which also on the side here we can see the volume that was accumulated right there as well. After the accumulation, a trend emerges. That's how the market moves. You have accumulation and then a trend, accumulation and then trend. or if you want to call it consolidation. But after every consolidation, a trend has to emerge at some point, and those are the type of trends you want to follow. You don't try to fade those kind of trades that come out of a high volume area like that, because you have no clue how much money had gone into this zone right here that finally starts the trend. This is a lot of money, and this is done on the weekly chart. So we're here now. We have a high volume area right here. So going by the strategies and the principles of like the volume profile and trading with the volume, because this is all learned knowledge, and you could go and learn about this yourself. Whenever you have a high volume, it's called a high volume node. Those spots where the volume drop off are called low volume. You can call them a low volume node or low volume area. Low volume areas. A low volume area is pretty much just telling you there was very little to no transaction going on down here. So there wasn't a lot of participants, there wasn't a lot of transactions done. So whenever price comes into an area like this, it usually just speeds through it until it finds the next area where a lot of volume was done. Think about it like business. If someone has a lot of money and wants to do business, he has to find somebody else that's willing to do that same type of volume with them to do the transaction. If you had a lot of money to transact right now, you'll be looking for places of high volume where there are other participants for you to offload or unload whatever you're trying to do. If you're trying to do a huge amount of money, you're not coming here to where there's no volume, like no one is trading here. So why would you come transact over here? That's kind of like the idea behind it. So whenever price comes into a low volume area, two things happen. It either comes in and wicks right back out in the opposite direction, or it just falls through. And once it falls through, it's gonna be finding the next the area below or above where there was some type of balance in price, because these huge volume nodes also indicate a balance in price, because that's where buyers and sellers were willing to do business. So if it's falling through a low volume area, it's going to find a previous area where you had the balance, and it's going to settle there for however long before making the next move. So that's kind of like a quick run through on how volume profiles work. So for this weekly chart, we zoomed out this much so we can see how the volume looks like on the big picture, and we can see this is the point of the where the highest volume was done. The exact point where the highest volume is done is called the point of control. So this is the point of control, and then right here you can see a big dip in the volume where I placed this. Like there was a lot of volume, and then it suddenly drops, and from that drop we have further drops here. But based on the principle I mentioned earlier about what price does when it enters the low volume area, is that it either wicks out or it falls through. You can see an example here. Before all of this happened, the first time price came up here, it came down into this volume, a low volume area, and it wicked back up, and that's how we got stuck. From there we got stuck in this range. So but now what I do, or what you should do if you're trading with with this volume profile, the visible range, is to mark out areas where you have low volume areas, because those are the points on the chart where you can expect price to have some strong reaction to whenever it comes back. So like this, something like this, mark this out, and we could put another one here, because this is a weekly chart, so it's going to take forever to even for price to ever come down here. But whenever in the future when it does come down here, these are the points where you should be expecting some action. What did I do? I just lost. Okay, I think I clicked on. Where did my drawings go? Sorry guys, I had to figure out what the hell happened right there. So what I accidentally clicked on the space bar, so it changed the currency we were on. So I thought I lost my the drawings we had on the screen. Yep. So where was I? Yeah. So we marked out the low volume areas on the. This is on the weekly chart, so that gives you a broad view of the point of interest. These zones are bigger. This one is really small, but this is the one that I marked out. And then now we're gonna go to the lower time frame. Not really low, but the daily. So on the daily chart, if we pull this up, as you see, the daily chart is still in an uptrend. The ExoCloud is still green, so we're still in that uptrend. But now we can see the low volume area much better. So first thing I do now that we've identified the range we're in, the uptrend has stopped pretty much here because as soon as we got here, we started trading sideways. So since the uptrend is done and we're about to go into a range, and the next thing I'll do is to place a fixed volume profile. So the fixed volume profile will let me know in this range we're looking at what are the points that we should be looking at in this range to look for opportunities to go long or short, since we're in a sideways ranging market, and that would let me know when to either get in, get out, or if a new trend is about to start. Because, like I said earlier, after the accumulation phase, you can anticipate a new trend to break out of that range. So, what I did was draw a fixed volume profile. I'm gonna draw a new one just to show you how, because I had some questions about this, how about the volume profile. For the fixed volume profile, you can find it. It's in one of this. I think it's here. I already have it in my favorites right here. But if you're trying to find it for the first time, if you're not used to it, it's somewhere here. Fixed volume. Yep, right here. So fixed volume profile, I'm not going to go into like details on how it works and how to use it, but um, pretty much all I did, or what I typically do after I have identified the range that I want to analyze, get the fixed volume profile and then click on where you want to start and just drag it over to the end. Once you do that, it would immediately tell you what the what the volume analysis of that whole range is, and you can just see it instantly. You can see the top, which is called the value area I, and the bottom, the value area low, and the green dots in the center, that's called the POC, point of control, and that's telling you in this range you've selected, this point is where the highest volume was done. And if you look on the right, it lines up with the visible range volume profile. But if you did not have this on and you only had this, you would avoid also seeing that this is the point where the highest volume was traded. So if you're not using this tool, you have no clue about that, because you're pretty much just seeing candlesticks, but you don't know where the most activity is happening. And knowing that is very crucial, because the point of control, the importance is that whenever price is above it, since is above it, or when if it's below it, in reference to the value area high or value area low, lets you know if we're leaning bullish or bearish. So if you're below the point of control, for example, it means you're more likely to move towards the value area low. And when you're above it, there's a chance that you might make it up to the value area high. So it's as long as the price keeps that sideways movement, you're going to be playing ping pong between both ranges until there's a breakout eventually. But this point of control lets you know where to pay attention to. So for the weekly, I had drawn out this this low volume area node right here, and that's what you saw in this this little area right here. That's it right there on the daily chart. So, and this range starts from April 11th. So this is at least 3 months. Yeah, about 3 months of price action. So that's a lot. So for 3 months, if this is the value area high and this is the value area low, you could bet these zones are going to be respected in a way. The importance of these zones of like you can't just ignore it. And when this is the point of control of a 3-month rotation, that's something you want to pay attention to. So the first reason, so that's like the first thing I did just to identify the range. So let me get rid of this. I'm going to use the original range that I used in the forecast. It's the same thing, just a different color. So this then starts to serve as my weekly range. So as the week goes on, this stays on my chart, and as wherever we are during the week, it lets me know, it gives me a bias just looking at it already without even doing any analysis. So that's why this is so helpful in your trading. Makes trading so much easier. So why did we take the trade is the topic we're on. And if we this is on the daily chart. When I took the trade or did the analysis was when we broke out of this fixed volume area. And the reason I put this volume here was we made an attempt to break out of this fixed volume area, the weekly range, the weekly fixed volume profile. We made an attempt to break out of it right here. And as I mentioned earlier, when we break out of a previously balanced area where you've already have a range and you get a breakout from there, it could potentially lead to the start of a new trend, just same way we had it over here. If I put a fixed volume profile over here, you see the same picture. It's the same thing happening over again. But how do you know if that trend is going to continue? There's no way. You're not going to know. But you know what to anticipate. So see, this is a daily chart. The first day we close the green candle above it. That's the first signal we could possibly continue the uptrend. But on the second day, we close pretty much right back in the range. The third day we close back inside the range again. So that's when I then drew my second fixed range profile inside of this range, and I started from where the move started from, which was from this candle, from this daily candle, because we tested the top of the value area. We pulled back right to the point of control, and then we made another move up. So I had started to track the volume from here. We broke out, we it failed, we closed, we broke back in, and then we started heading. No, I think we started consolidating. This is a futures, gold futures, so you're not gonna. Some of the candles are not fully formed the way it would look if we were to look at like the spot gold spot, the XAU chart. But we spent about 2 days extra at the top. So first thing, we broke out and then we broke back into the range, just like we broke back into the range right here. As soon as when we broke back into the range, we sold down to the bottom of the range. Here we broke out of the range and we've broken back into the range again. So you would expect that we would sell right back down to the bottom of the range again, because since we're in a range, that's what you expect, is just the back and forth movement. So since we stayed there for 2 days, right at the top, and we're not able to break back above that, every single day we kept closing below it, fueled my bias for a short trade. And this is on the daily. And typically with volume profiles, another tip, if you when you leave a range and you come back in, you can expect it price to go to the opposite side. Just like here, we left the range and we came back and closed back into the range. So the fact that we got accepted back into the range, you can expect it to test the value area high, or if the opposing side of that range. But first, before it makes it over there, it's going to test the point of control of that range, wherever that is. If this happens to be somewhat in the middle, but if it was up here, that's where you target once we get accepted back into a range that you've previously left and came back into. So this left the range, it came back into it. We closed two daily charts right back in the range. So naturally, with what I just said, I would expect us to test the point of control first, and then test the value area low. In a previous video I made on YouTube, I think I made that forecast as well of us testing this way before I even like made this the most recent forecast that I did, the one that I'm recapping just now. So this range, this new fixed volume profile with the green high and low, the point of control for this little range right here is up here. So we're gonna go to a lower time frame to see how price reacted to this point of control, and then we would see what the trend was like and where exactly I entered. Alright, so if we go, let's go to the 1 hour chart. I think I should close this since we're not using this. So if we go to the 1 hour, okay, so on the 1 hour, this was where I had called the trade. Okay. Alright, so on the 1 hour chart, this is where's my arrow? Let me get another one. Alright, so if we look, the ExoCloud um, it was green. We're green all the way up here. We were on an uptrend. This was when we broke out of that weekly fixed range, and then the ExoCloud flipped red while we were breaking back down into the range. So as soon as we got into the range, you can see what happened here. This is the point of control POC, and you can see there's a whole lot of consolidation is happening right there. That's the accumulation I was talking about, and we didn't move. The other reason we had this accumulation was there was news. I think that was the week where we had NFP, but there was also news coming up the very next day or so. That also added to the reason why we consolidated here. But the ExoCloud had already flipped red, and we've broken into the range. We're already anticipating a sell, so we we expect price to continue down from there. From the point of control, there's no other direction to go from here because we already went up. We got rejected, so the only direction is down. And what we have down is the point of control of the main range is down here. Since we've broken back into it, the trend is red. Where do we go? This is the first place we want to target, is the point of control. So we were that already fueled my my bearish approach to this, but I took this trade, but I didn't hold all the way down. And when we got down here, once we broke out of this range, we broke out of it. We tested the point of control. It's still so down, and then we came back up into it. That's when oh yeah, so right here was when I think I gave the signal first time around here, and then when we came back, this was where I took the trade. I took the trade based off of the 4-hour ExoCloud, because on the 4-hour, it was the first time we would be retesting the ExoCloud. The ExoCloud is a trend indicator. Whenever we start a new trend, how I use it I already use the volume profile to establish my bias, what direction I want to go, but then I use the ExoCloud to enter the actual trade, because it's an EMA based cloud, so it's a kind of dynamic support and resistance for me, and to know where to enter, because there's a lot of noise and you want to know where to get into the trade. So two ways I can enter the trade is to either use the low volume areas of the actual zone where I'm at, like this low volume area right here, or something like this that lines up with my trend. So what I do whenever a new trend starts, I wait for the very first time it's retested. So the 4-hour was about to be retested for the first time when I called the trade. So right, this is the 4-hour chart. It flipped red for the first time here. On the 1-hour chart, it was red all the way from here. The ExoCloud already flipped red, but this is the first time it flipped red on the 4-hour. And this was the first time we were also retesting it. So since we're pulling into the cloud on the 4-hour, and I already have the bias that because we just broke back into the range, we should go and test the value area low. This was the perfect confluence for me, because we're retesting the cloud. That's number one. Number two is we have a low volume area here, And from what I mentioned at the beginning of the video, the low volume areas are areas where you should expect a very quick price movement. Either price comes into it, either price comes in and wicks out immediately, or if it just flies through. And in this case, after we sold all the way down here, we came and retested the zone, the low volume area, which was in confluence with the ExoCloud, the trend, and then this range that I was watching to see the volume profile from when we retested the point of control and made this whole move up. This is the value area low of this range right here, and we broke out of it. And this was also the first time we were retesting it, because this is a retest of this value area low. So that's like 3 confluence right there. So the conviction to take the trade was pretty high for me, and I put the stop loss close. It was above the value. It was above this value area low, because typically, if you're gonna be rejected, you shouldn't. It should either be rejected immediately from the value area low and continue down, or if at all it's going to make it above it, it should just be a little bit and then fail. Same way we made it out of this the range of the weekly range. We made it out and then we failed and came right back into it. Same idea, but on a smaller intraday perspective here. We broke out of the range and we came back to test it. Simple break and retest. So that way, if you can have an idea where to place your stop loss. And since we expect price to wick out of this low volume area, we don't expect it to make it all the way up. So it makes sense for your stop loss to be above that gap. Typically, it's recommended you place it above, completely above the low volume area, like somewhere like here. You could put it some, but that would be a lot of stop for me, because I already had that confidence that we were in a downtrend, because this already flipped and we had retested a previous value area high. And and I think when I checked my momentum as well, momentum indicator also indicated itself. So all of those things contributed to taking the sell from here, and we targeted the value area low. That's for this forecast right here, and that played out nicely. So that's pretty much a recap, a very long recap of the previous trade, and I'm so sorry that took so long.